How to invest on the stock market and succeed? It's a question that new and old investors have each and every year, whether they're refreshing over into a new year and thinking about refining or continuing to develop their strategy, or if they're a newer investor, potentially ready to take that plunge and working out how they can make that edge and potentially succeed on the market. I thought it'd be a good time for us to explore this topic together, to discuss some of the different frameworks that I personally use when thinking about how to look at companies, and to also explore a range of different factors that might go into forms of analysis and also how our end results might be. It's an important and a fascinating discussion, so I hope you enjoy the video. If you do, don't forget to hit the like button, feel free to share it out, and if you're new here, welcome. We make daily videos each and every day, so make sure you've subscribed and turn your bell notifications on. It truly is a question that so many people have, year in and year out. But I think probably bringing it back down to first principles, before thinking about the different factors and inputs that go into stock market success, it probably makes sense for us to take a step back and think about, what are we even doing on the markets? Investing. What is investing? It's the dedication or investment of an asset to attain an increase in value and generate a return over a period of time. So of course, we often see this image that we see here on the right, where we put something in and over time it continues to grow and potentially compounds and it grows into something much bigger. That at its core is what we're trying to really do and develop on the market. And so with that in mind, now it makes sense for us to explore this question further. And so before exploring the key factors that go into our analysis and the key things that we should be looking out for when analysing companies, it probably makes sense for us to answer the key question: why are we investing? There are so many different reasons to invest, whether it's to protect purchasing power. This is definitely becoming more and more important in a high inflationary time like we're currently experiencing. Whether it's to save for retirement, earn higher returns in a low interest rate environment like we're experiencing, investors are often seeking and searching for yield, or whether it's just to reach for our financial goals. And of course, everybody's going to have different financial goals. If you're thinking about the market, are you looking to just match the market returns? Do you want to match the market index returns? Or are you seeking to beat the market? And once you've understood that question, then we of course have to factor in time and capacity. Not everybody can spend all day looking at the market. Do we want to actively manage our portfolio? Or do we want to just take a bit of a hands-off approach and maybe just invest consistently over time and match that market? We might realize when we actually spend our time investigating this question that, hey, maybe we thought getting involved in the markets and investing was for us. And maybe it is, but maybe not in the form that we initially anticipated. Maybe it is just dollar cost averaging into an index and getting those market matching returns. Or maybe we spend our time thinking about this and we realize that not only is it for those financial opportunities, but we actually see the opportunity to develop ancillary or supporting skills as well. Maybe we work in financial or commercial fields, and then there's the opportunity to develop our financial or modeling skills. Or maybe we work in different sectors, and by investing in the markets, by getting a broader understanding about the macroeconomic picture, will actually help us in our work or our day-to-day conversations. And then of course, there's just that really key answer that maybe we just really enjoy it. If we do want to invest, we have to realize we're going to have to spend a lot of time learning, understanding, developing the skills, and developing our broader understanding of the context of the market to be successful. And so it should be something that we enjoy. It shouldn't feel like eating your vegetables or doing your chores where you have to come back each and every day and you're just pushing to do another bit of research. It should be enjoyable. And if not, maybe it's not for us. And so I think the main thing is, before we even consider investing and how to get involved in the market, it makes sense for us to answer the question, why are we investing? What are the goals or the outcomes that we want to achieve? And is actively managing our portfolio for us? Are there other alternatives to achieve those same financial goals? Or are there other benefits that we're actually seeking? And how is the best way that we can go about achieving those while also factoring in time and capacity? If this is a discussion that you're interested in, make sure you stay to the end of the video. I'll share some of the resources that I've leaned on and really leveraged to develop my understanding and skills on the market. And before we do go further, a reminder that I'm not a financial advisor. Nothing we discuss on this channel is financial advice. Hopefully it's all just an interesting general discussion to be that starting spot for you to go away and do your own research from and develop your own strategies with. And so I guess if we flow through there, we've made the decision that we're interested in investing in the market, and maybe we want to seek that opportunity to actively manage our portfolios. Maybe we're seeking out performance. Maybe it's skill development. Maybe it's the cross-section of all of these factors. We have to then think about, how will we invest? There's a range of different investing forms. This is thinking more about long-term investing, but of course there's shorter-term day trading and other aspects as well. But if we are thinking about investing, Are we just going to have the most simple of approaches? Longer term, buy and hold. Are we going to take positions in companies that we believe in, buy and hold, potentially add to those? Will we dollar cost average in, maybe at an index level, or with a certain cohort of companies that we've looked into? Do we want to actively manage our portfolio more and spend a lot more time actually actively managing this? Or are we interested more in swing trading over positions? These are all factors we have to consider, and what one person decides will be different to another person who considers this. There is no one set strategy, but each individual strategy will be formulated surrounding their own mindset, their temperament, the amount of time and capacity they have, their skill set, and also just the general way that they want to approach the market. I think it's also worth noting about our total net wealth as a portfolio. So are we going to focus entirely on the market? Will we consider alternative asset types, whether it's real estate, whether it's any other asset types? Cryptocurrencies come up over the past few years. We need to make this decision at a broader type of level. And then I think probably the most important factor is considering what is our edge. So what I mean by that is everybody has an edge. Whether you work in the financial sector and you've got great modeling skills that you've leveraged and you're able to use that to model out. Maybe you work in accounting and you spend all day reading through the financial statements, so you're able to analyze these at a really good level. Do you work in marketing and you've got an understanding about how businesses go to market and how they're able to really deploy their products most effectively? Maybe you work in construction and you can see opportunities for different types of products that could actually ease the load that you're working with. Or maybe you work in a bank and you can understand what a financial technology product could do in terms of streamlining the processes. Everybody has an edge. And as we can see on the right here, the edge really plays at the intersection of our strengths, maybe it's our technical capabilities that we have, our interests. What do we actually enjoy reading into? What are we fascinated by? Do you spend a lot of time reading magazines in the weekend about a certain topic? Maybe it's retail or shopping. Or do you love reading into sport? Maybe it's data analysis. What is it? And then it comes into our habits as well. Where are we already spending the majority of our time? As we've discussed, looking into the market shouldn't be an additional thing that we have to force ourselves to do. It should flow naturally, and it should be another passionate aspect. As we all know, we only have 24 hours a day as humans, and so we should be spending it doing things that we enjoy and that we like. And so finding this edge at the intersection will give ourselves the best opportunity not only to succeed because we've got the skill set necessary, but also to ensure that we're able to stick at this for long periods of time. Because if you're just doing something and you're just looking for the next hot stock, or you're just looking for that name that's going to grow, sure, maybe you might get lucky and find it once, but you won't have developed the skills to do this consistently and to have stuck this out to be that longer term investor and to allow yourself the opportunity to continue to compound your gains and to consistently develop a system that will succeed over time as well. And look, if you think about this and you say, I haven't got an edge, well, before exploring active portfolio management or even before considering how you can invest on the market, maybe it makes sense for you to actually go away and develop your skills in terms of an edge. Develop your skill set, spend your time reading into a sector, become an expert, develop that opportunity where you are an expert or you have the knowledge advantage, and then you can consider different ways that you might be able to get exposure to that area. I'm keen to know your thoughts on it all. It's a fascinating discussion. Drop in a comment below what you're thinking about for 2022, how your strategy's been developed, and what you think the markets are going to do moving forward into this next year up ahead. And so that then leads us to the 1, 2, 3 of analysis. As we've mentioned, everyone's strategy is different. Everyone has different focuses, different perspectives that they're looking for, and this is informed by their worldview. The 1, 2, 3 of analysis is a broad framework of, the different pillars or buckets that I use when considering companies, and it flows through quite sequentially. But this is just a broad framework that I personally use, and everybody's going to have a different type of framework that they leverage, and of course, different ways that they approach analysis of the market. I'm keen to know your thoughts too. And so starting with number 1, this is quite the higher level, broad market analysis. So it's looking at the broader macroeconomic picture. It's understanding the industry and the sector that we're interested in. Are we looking at semiconductors? Are we looking at software as a service type companies? Are we looking in the resources space or maybe the biotech space? So it's understanding that and then thinking about the nuances within that space. And then once you've narrowed down, I then spend a fair bit of time looking at the competitive landscape. What are the companies that I'm interested in doing? What are the competitors out there doing? Where is the competitive advantage that they may have? How are the other companies trading? What is the previous sentiment been surrounding these companies? And it's really building that broader picture and starting to paint the narrative about, okay, what's the lay of the land at the moment? And then it's thinking about risks and opportunities. Is there increased competition on the horizon? Is there the potential of regulatory risks? Is there any concerns that maybe might be unforeseen to the market, but we could reasonably see that might prop up in the next couple of years? And then once I've done that, once I've got comfortable with the sector and I've got that understanding about what's been going on, who are the main players and where are the opportunities, Then if I've got quite an interest in it, then I'll look further into different types of companies and look at this higher level. I'll have this is quite a snapshot analysis, looking at the business model. What do they do? How do they deploy their product or leverage their technology or resource or their advantage? What is that advantage that they have? And as we know, surrounding this moat, is it difficult or impossible to replicate? Is there not really many barriers to entry? So can other deep-pocketed competitors come in and replicate it pretty quickly? Who are the leadership team? Do they have experience? Have they done this before? And what's the alignment? Do they have a high amount of shares that they own? Where are they currently positioned? And how are they able to inspire that management team? Do they have that alignment with shareholders? And then finally, product and technology. What do they actually have their hands on? Is it unique? And why is it a competitive advantage moving forward? And then if I've got a fair bit of interest in these types of areas, then I whittle down a short list and I spend some time doing the financial analysis. So spending time with the financial statements, you've just got to become an expert at doing this. You need to be able to read a P&L statement. You need to be able to get an understanding of the balance sheet and then look at the cash flow statements and make a pretty quick assumption of all of this. So that really has to be the bread and butter. And if you haven't spent a lot of time doing that, you can either just spend your time going through these statements, understanding them, or there's plenty of different books out there that can give you that insight and your quick courses to them. And then obviously these are skills that you continue to develop incrementally over time. Once you've developed that initial understanding, which is that core competency, then you need to start understanding, all right, I can read these down, I've got that understanding, but what are we actually looking for in develop a system? Everybody's looking for different sets of key metrics. Different investors will prioritize different key metrics, but there are a broad bucket of metrics that most investors will look at. Once you've done that, then it's developing that system so you can replicate the analysis for comparable types of companies in the market and you can benchmark against them. Of course, looking at individual companies in isolation, it can be interesting, it's fascinating, but you want to be able to benchmark against like-for-like competitors and work out what you're weighting them and what's interesting. Obviously, then you can build out your models. Once you've got this understanding of it, everybody's got, whether it's the DCF or their different types of models, depending on what types of aspects you're looking for growth, as long as you're able to replicate it and look at comparable companies like for like, then you can start to have some comparability and be like, all right, there is some advantages in this model here. Actually, there's some concerns in terms of cash burn for this company here. Okay, this company has actually been growing their margins over time, and it looks like they've got a lever that they can continue to grow this profitability. But you need to be able to compare that on a like-for-like type of basis. And then finally, flowing through with all of those, if I'm interested with all of those, then I'll use technical analysis. Obviously, technical analysis is retrospectively looking, so it's looking back, looking at different statistical trends and insights to get that understanding about timing and also different types of trends or ranges that we may see. Technical analysis is looking at the charts and they can provide us with a range of insights. We can see, are we in a trend? Is it trending upwards? Is there lots of momentum behind it? Are we trading in a range and bouncing between support and resistance? What's the sentiment saying? Is volume increasing? Is there a lot of attention? Or has volume died out? Are we starting to bottom out and there's not a lot going on? And technical analysis is often utilized to understand optimal entry and exit positions. So if I've got comfortable with companies that I'm really interested in, then I'll just be patient. I'll spend time looking at TA and wait to see if those key entry positions are eventually hit. And I think the most important thing to remember about these different tools is different investors will lean on different tools. Obviously, everybody's going to have different preferences. Everyone will have different skill sets and capabilities, and they'll have different strengths that they'll play to. But it is worth getting an understanding about the different types of analysis that individuals look at and being able to have a snap look and be like, okay, this is positioned here, or okay, this is positioned here. You don't have to be an expert at all of it, but having all of those different tools in the toolkit can be useful for your analysis, no matter which end of the spectrum you end up sitting on. And before we get into some of the resources that I've really benefited from reading and spending some time exploring, I thought there would be a fourth component. Now, this is not an aspect of analysis that we can do onto companies or the sector or the broader market, but I think understanding our own mindset and our temperament on the market is just as important as anywhere else. Obviously, it's an area that emotions can fly high. It can be emotionally charged. We're obviously playing with money, and it can be quite nerve-wracking, or it can be intense at different periods of time. It's going to test your resolve no matter if you're the most experienced investor or if you're new. And so developing an understanding about our mindset and being able to position ourselves as investors into the right types of areas by leveraging this mindset is pretty critical. So some of the main areas of, mindset that I find myself relying on developing or continuing to focus on are these three here. Firstly, it's the locuses of control. You might have heard of this framework previously. Essentially, the locuses of control determine individuals' perception on the world and whether they believe that the events that have happened to them or where they are positioned in life is a result of their internal decisions and choices or the external factors that have happened to them. And look, both of these strategies are strategies that are employed by people around the world. There is no right or wrong, but I personally find myself trying to lean into the internal locus of control as much as possible. Things can happen, factors can happen, pandemics can happen, anything can happen on the markets, and we've seen this consistently time and time again. However, I find myself being a much better investor and being able to develop much faster when I'm spending time focusing on what I have been able to control. And if things have gone wrong, really bring that, not the blame, but bringing the responsibility back onto myself, because that means that I'm able to develop the understanding and the learning as quickly as possible. I feel like when I am leaning on external locuses of control and being like, this happened because X, Y, Z, it was out of my hands, I couldn't do much, then we're absolving ourselves of the responsibility, but ultimately also the opportunity to learn. And so I think locuses of control is something I'm always trying to develop and refine, not only on markets, but in the day-to-day life as well. I think a habit and passion for learning is something that's so critical all the time in every single aspect. Firstly, on the markets, this is a long-term game. This is not something that you get into, and it's not a casino. I think too many people come into the markets and think, oh, they're going to be wealthy and find that one hot stock and become rich in a year or 2 years or 3 years. As the quote goes, the market is a mechanism to transfer wealth from the impatient to the patient. This is a long-term investing game if you're a long-term investor, where you rely on compounding, patience, developing your understanding, and most importantly, success on the market comes as a result of knowledge, and knowledge is accumulated over time incrementally. And so it's about understanding and enjoying the process of learning. We're not going to know it all immediately. I know that where I am today is far away where I'll be as an investor in understanding in 1 week's time, in 3 years' time, in 5 years' time. But where I am today on the same coin is far ahead of where I was 1 year's time or 3 years' time ago. And so it's just understanding that, hey, we're never going to know it all. But if we just add on one mechanic each day, or one different analysis tool, or one different capability each day over 365 days, it starts to add up. When you times it by 2, 3, 4 years, just consistent incremental habits. They don't have to be changing the world every day, but small bits of habit, focusing on the enjoyment and the ability to learn, can add up in a big way. We see it with a portfolio compounding over time, but I think not enough people spend enough time focusing on compounding our learning and our knowledge. And these are definitely skills that we can develop as well. And then patience. I mean, it flows through exactly that we've just had that discussion surrounding learning, but this is a long-term process. Investing on the stock market as a long-term investor takes time. It takes patience. For anyone who's been involved in developing a side hustle or establishing a company or a business, they will know that these things take time, and you cannot establish businesses immediately over time. And I think there's so many investors who are often finding themselves stating that they're longer term investors, but then suddenly 6 months happen or 12 months happen and the share price hasn't moved and they're thinking something's wrong with the company. If we were watching sport and we conceded a goal in the first minute of our game, we wouldn't suddenly dislike the team that we support because they conceded a goal in the first minute of our game. We understand that games are played over long periods of time. And then we're not even judging them on, say, 1 year, which might be considered a game, but we're judging them over a season's length or a longer term period of time. So patience is critical in this. And patience is where we get the opportunity to develop our conviction, continue to develop our knowledge as well. And obviously, as retail investors, there are edges that we have in comparison to different types of investors. And one of those is the fact that we have no short-term time limits on our holds. We're able to hold for longer term periods of time if we decide so. And that's where patience can often be one of the best drivers of success. Now, of course, that doesn't mean just holding on to a company that's going to go all the way down to zero. And it's horses for courses. It's context dependent. And each individual investor will have to make individual assessments as they go through their analysis. But I think if we spend more time willing to be patient, willing to understand that companies are built over time, not over weeks, months, or even 1 or 2 years. If we're willing to spend our time learning and being consistent students and focusing on what we can control internally versus the external factors, well, hopefully 2022 will be a good year in terms of the development and the opportunity that we all have to grow moving forward. And so here are a few of the different resources that over time I've found myself leaning on or that have really helped me develop my understanding of the markets or different sectors of the market. Before exploring each of these, if you have enjoyed this video, don't forget to hit the like button. Feel free to share it out. If you're new here, welcome. As mentioned, we make daily videos each and every day. So make sure you've subscribed and turn your bell notifications on so you won't miss any of those as we keep you updated throughout 2022. And I'm keen to know your thoughts too. So drop in a comment below what resources, books, videos, articles, or podcasts you've really got some benefit from and that have helped develop you as an investor. And also let us know what different strategies you'll be employing into 2022 and any learnings you've made over the past year. So on the macroeconomic front, I think first and foremost, this is the most common sense thing. But we should be reading the news every single day to develop our understanding, not just for the markets, but of the broader macroeconomic picture. And it helps us be more informed on the day-to-day. It helps us have more enriching conversations. It helps us to develop understanding about different sectors or different components of the world, whether it's a political lens or an economic lens or a financial lens or a sector-specific lens. But it also gives us that platform to develop the understanding of the lay of the land. Suddenly, if we've been looking into a sector, for example, and we see a different company have great success, they bring out a new product, a company gets acquired, or maybe there's some capital markets activity, or maybe there's some huge growth on the back of X, Y, or Z. If we're able to bring that understanding into companies that we're looking into, or maybe just use those tools as different ways to benchmark different types of trends that we're seeing, this can all help to inform our abilities as investors. So I personally spend a lot of time each day reading the news and really developing that understanding, not just by reading it, by writing in different trends or habits or topics that I've seen into a different investing journal. I've found that useful personally by keeping a record of it over time. We know that, of course, as they say, history doesn't repeat, but it often rhymes. So I keep a journal about things that have happened over time, and then you can reflect back and be like, oh, X, Y, and Z happened as a result of this macroeconomic decision, or the price of this commodity went down because of this different political change. And over time, you can get a bit more of a broader understanding. Another book that I really enjoyed on the macro front was Principles by Ray Dalio. Now, it's a bit more of an informed read. It's probably not something to read straight away if you're just dipping your toe into the markets, but I really enjoyed it. It was great to get an understanding, I guess, about cycles, a different way that the economy works. Ray Dalio is obviously a very, very smart person. And more than that as well, he infused mindset and the way to understand the world along with economic principles as well. And so it feeds into that mindset discussion that we just had. In terms of the investing front, couple of interesting books. I mean, there is essentially the holy grail that's often been discussed by Benjamin Graham called The Intelligent Investor. This is not an easy read. It's not the funnest read. It's dense, it's textbooky, but I think it is a staple and every longer term investor should at some stage spend their time reading it. You'll take some things and use them to develop out your strategy. Maybe you'll read others and it doesn't quite align with your investing format, but it's definitely something that's worth reading. And then I guess on a bit of a different type of lens, Warren Buffett's Snowball was one of the earliest books that I read years ago now, before I'd even started investing. But this was the one that I guess ticked over my understanding of compounding and why it was important to spend time investing. And getting that understanding from obviously Warren Buffett, who he's been doing it for a long time, getting the understanding about the different types of mindsets he had at key decision points in his life, all the way from when he was a child through to establishing Berkshire Hathaway and obviously the decisions from then. I got a lot of benefit from this. This is more of a conceptual book rather than, I guess, a prescriptive book about how to invest. It's obviously more of a narrative-driven one, but I personally enjoyed it too. In terms of TA, technical analysis, if you've been following the channel for a while, you would have heard me discuss this book many times before. It's a book that I swear by and I got a lot of benefit and understanding for, called The Art and Science of Technical Analysis by Adam Grimes. Not only was it basically the A to Z of understanding TA, but it really gives an insight into sentiment, cycles, why things move the way they do, market participant psychology and the way that they're assessing different movements. So if there's one book that you want to read that gives you just that broad understanding of all of it, it's one that I really, really enjoyed. This is another that is dense and it is not an easy read. I spent probably a good 3 or 4 months reading through it and I just spent 30 minutes a night, each and every night, reading through it. I almost felt like I was back at uni for business school and reading through it, writing out some notes here and there, and then going through the next night, reading through it, writing out some notes and just doing a concept after concept after concept. But by the end of it, I felt much more informed and it's really something that's been the pillar of my understanding of, I guess, cycles and the way the charts move. And then the second resource that I've used, you can see here, it's just a chart. I think it's just getting onto the charts. There are many different tools out there. You can pick the bunch of them really. TradingView is one that's often discussed, but there's many tools that have got free trials that you can try in terms of just getting access to the graphs. And once you've got understandings about the key concepts, whether it's volume, support and resistances, trend lines, candles, and the way things move, I'd encourage you to just get back out there and get on the tools. There's no better way to develop the skills than actually just trying them, getting an understanding, watching the charts, seeing where the prices are fluctuating between, what's driving them, what are the fundamental drivers behind them. And so it's just getting amongst it. You're not going to be perfect straight away. No one is. No one ever is. But if you just add a key capability each and every day, again, as we mentioned, over 365 days, by the end of 2022, if we revisit this video and you've been doing a little bit each and every day for 365 days, I think your knowledge is going to compound pretty rapidly. It's a fascinating time. A new year provides a new chapter and a new opportunity for us to refresh our mindsets and really to refresh our goals moving forward. I'm excited. I'm looking forward to the year up ahead. Thank you so much for joining us. Hope you enjoyed the video. For now, stay well. Best of luck in the year for 2022 and happy investing.